Crypto's in focus again. Yesterday in federal court, FTX founder Sam Bankman-Fried pleading not guilty to criminal charges in connection with the collapse of his crypto exchange. That trial set for October. Meantime, regulators warning financial institutions the crypto exposes banks to, quote, fraud and scams. That's coming in a joint statement from the Fed, the FDIC, the Office of the Comptroller of the Currency. Jim, how much in here is new?
Mad Money host Jim Cramer once again reinforced his stance that the crypto market is wrought with scammers and bad actors. That if you're in crypto, now is the time to get out. Now he warns that big government is coming down hard on businesses that don't play by their crypto rules. Let's see if his claims hold any water and decide if he's right. Thumbs can also hold water if your boat is sinking, so be sure to use them here to keep us afloat. Thanks for watching.
Well, I think that there have been a lot of people who thought that the banks would adopt it. Fidelity adopted it. I think these statements are the beginning of what I've been calling for, which is that I think the SEC is going to do a roundup of the ones who are not compliant. They said that they made this broad statement saying, listen, if you do not go along with the rules, we're going to come after you. I follow John Stark very well. He's an 18-year enforcement SEC consultant now. He's calling for a sweep. Says that the SEC is going to sweep everybody, which is why I'm telling everyone, get out of these. Now, there was Michael Semblis in his excellent review, Eye on the Market, was talking about some people were saying that J.P. Morgan had actually had a dalliance with this. I can tell you personally, when I was frantically trying to get my Ethereum out of an exchange that has collapsed, I went to the highest level. I said, please, please. I said, no, we're not touching this. And I think that that's been the way that it's not a shock. Because the banks have been the leaders. They're anti. This is not even fintech. I think a lot of people feel like John Stark, that it's just a giant scam.
Do you think Bankman-Fried will be material to that roundup between now and October?
Very much so. I think everybody's in on it. And I know that's a very harsh charge. But if it's a Ponzi scheme and it's falling apart, I'm sure there's some honest people. We all know honest people are in crypto. But I'm not calling for a crypto collapse. I'm calling for collapse of the people in on the Ponzi scheme that John Stark talks about. And he's laid it out. You just got to read it. Follow him on Twitter. You'll read everything, which tells you, look out. And here people are bidding this up, and get it out of where you have it. But try to find a place that you can trust.
Why do you think it's been so resilient here in the high 16s?
Well, I'll tell you what Stark says, because it's phony and a scam. Being propped up by people who need it propped up, and that's all there is. Very harsh.
Let's take a look back to a few months ago to hear Jim's hot take on how you should navigate the crypto jungle. We should count ourselves blessed to have sage advice from someone like him.
We're going to break form here. We're going to start with crypto. Yeah, I usually don't do that. You should go to the stock market, right? Crypto. Why? Because I'm beginning to think that these are Seinfeld assets. They're about nothing. The other day, David Faber and I interviewed Gary Gensler, chairman of the SEC. He was on to announce a deal with China where their companies would finally play by our accounting rules. Maybe that's the first step to making some of the newer Chinese stocks that trade here into something more than a worthless parlor game. Near the end, I asked him if he had a look at all of the new crypto coins trading on some of these exchanges. He was circumspect. So I went one step further, and I asked, well, what would happen if my colleague, partner, buddy, pal, friend David and I created a coin, took a lot of it down, and then listed in a classic front-run pump and dump? He suggested that we would need, well, let's say, good lawyers. Now, one outfit that I don't mean to pick on, Coinbase, they have more than 200 tradable coins. I'm not exaggerating when I say they seem to be changing by the hour. From the looks of things, I think a lot of people in the crypto ecosystem better hire very good lawyers. Some of these smaller coins, well, they do seem to lack the gravitas of, say, Wabistics.
You're supposed to push Wabistics.
Yeah, that legendary boiler room pump and dump shop that occupied a couple of episodes of The Sopranos. But now the big ones, Bitcoin and Ethereum, are cascading. I'm beginning to wonder whether one day, sometime soon, we won't even need to have these quoted on the side of the television screen anymore. Won't need, or maybe shouldn't. I think it's time we start questioning the fundamentals of crypto. And I don't like when we question the dot-com movement in 2000, 2001. When all things crypto took off with great fanfare, like the dot-com bombs, we were told that they were stores of value, that they meant something, that they would be around for a long time. I believe that rap. 300 of them went out of business. I'm at least big enough to admit that this time I was wrong about crypto. I wish the real promoters would do the same. Just because you make money in it, which I was fortunate enough to do, doesn't necessarily mean that it's for real. Hey, then there was this period where every athlete and celebrity were showing up in these crypto ads, a brooding Joel Embiid, a hilarious time-traveling Matt Damon, a young as ever Tom Brady, LeBron James going to the league, Reese Witherspoon, who's a genius, and even Gwyneth Paltrow, who's above everything, but still didn't go to her cousin Rebecca's wedding. Oh, yeah, and Aaron Rodgers took some of his salary in Bitcoin. Does anyone like that guy? I hope A.J. Dillon and Romeo Dubes click with him. They're two of the guys, draftees on the Ski Daddies there, because I don't know anybody else who does. Now, everybody who's promoted this stuff is looking pretty funny, and the public companies that jumped on crypto as an actual currency seem to have wasted a lot of time and money. In the pain parade, I start with crypto because I think that there was a huge amount of capital being used to prop up Bitcoin at 20,000, and the fingers in the dike are now looking mighty tired. Now, again, every one of the public companies are involved. I don't blame them. There was a lot of public demand. That's what they wanted. They're just doing what the public wants. But maybe the public needs to know better. That's what I'm trying to do. Not criticize the companies, but just make it so that you know better.